A frozen bank account can look like the end of the story when it is often the start of the real search. A pensioner dies. The family finds a death certificate, a few old letters, maybe an old passbook, and everyone assumes there was not much else to find. Then months or years later, someone discovers a statement from an old bank, an occupational pension, premium bonds, or money sitting in an account nobody realized still existed. For some families, it is a small amount. For others, it is thousands of pounds that never made it into the estate. This script explains why that happens, who can claim the money, and how families can actually unlock it. When a bank learns that a customer has died, it usually freezes any sole account in that person's name. Cards are canceled, direct debits may stop, and relatives cannot simply walk in and withdraw the balance. That freeze can feel final, but it is really a control step. The institution is trying to make sure the money goes to the lawful person. Joint accounts often work differently. In many cases, the surviving joint holder keeps access under survivorship rules, though the bank still needs to be told about the death. The main point is simple. Frozen does not mean lost. Frozen means the bank wants proof before it releases the funds. The next question is, who has the right to deal with the account? If there is a valid will, the executor named in that will is the person who usually handles the deceased person's assets. If there is no will, intestacy rules apply, and the appropriate relative can seek authority as the administrator. In practice, banks and building societies usually ask for a death certificate and some proof that the person contacting them has legal authority. For larger estates, that often means probate if there is a will, or letters of administration if there is not. Families often panic when they hear those words, but they are normal parts of the process. A key detail gets missed all the time. For smaller balances, many banks have a simpler route. Most large institutions have bereavement teams and internal small estate procedures. If the amount in the account falls below that bank's own threshold, the bank may release the money without a full grant of probate. One institution may require probate for a balance that another bank would release with an indemnity form, a death certificate, and identification. That is why no family should assume that no probate means no money. Sometimes the claim can be completed through the bank's own paperwork and never reach a court stage. The practical process starts with documents. Gather the death certificate, the full name of the deceased, date of birth, last address, national insurance number if available, any will that exists. And every piece of paperwork that points to banks after that. Contact every known bank and ask the bereavement team whether there were sole accounts, joint accounts, or balances that fall inside the small estate release policy. If probate or letters of administration are needed, apply for them. At the same time, start tracing assets that are not obvious from the main current account. That is where some of the biggest surprises appear. The rules also depend on where in the UK the deceased person was domiciled. In England and Wales, the usual routes are a grant of probate where there is a will, or letters of administration where there is not, together with whatever inheritance tax reporting applies. Scotland and Northern Ireland use related, but different systems. Families do not need to become legal historians, but they do need to identify the correct jurisdiction before filing forms. The basic truth remains the same across the UK. The process exists precisely so frozen money can be released to the right claimant, not so it can stay trapped forever. Bank accounts are only part of the search. Old workplace pensions are often missed, especially when someone changed jobs many times. Defined contribution pensions may carry separate death benefits and are not always governed by the will in the same way as the rest of the estate. Defined benefit schemes may pay a survivor pension to a spouse, civil partner, or sometimes a dependent child. There is also a free pension tracing route for finding old schemes. For many families, the biggest missed asset is not a current account at all. It is a pension that nobody connected to the wider estate paperwork. State pension problems matter too. Some older pensioners, widows, and women were affected by historical errors in entitlement calculations. In some cases, records were not updated correctly, and underpayments built up over time. That means families should not only ask whether the deceased had a bank balance, they should ask whether any pension entitlements were wrongly calculated, whether a spouse or survivor was underpaid, and whether there is a route to reclaim those missing sums. This is another reason the phrase frozen account can hide the real issue. The lost money may not be sitting in one obvious place. Other overlooked assets show up in unexpected corners. Premium bonds, national savings products, dormant building society accounts, life policies, share registrars, employee share schemes, old credit union balances, utility refunds, tax rebates. And even overpaid care home fees can all belong to the estate. A careful executor, often finds more by studying old statements and tax paperwork than by staring at the main bank account. Families tend to search where the money is easiest to imagine. The smarter approach is to search where paperwork hints that money once existed. There are tracing routes for genuinely dormant or unclaimed assets. If the family already has account details, the process is usually straightforward through the institution or registrar. If they do not, tracing services can help match the deceased person's details to old providers. That can be slower with orphan shareholdings or very old insurance products, but slow is not the same as impossible. What matters is evidence. The claimant has to show the death, the relationship or legal authority, and enough identifying information for the institution to search its records properly. There are also cautions. Funeral costs, debts, care fees, and inheritance tax liabilities can affect what is actually distributable. Executors must not rush to hand money out before the estate is fully understood. Fraud checks are strict, and rightly so, because banks need to protect dead customers as well as living ones. But none of those warnings change the hopeful point. Many families simply never ask the second question. They ask what was in the obvious account, but not whether there was anything else. That second question is where the hidden money often sits. There is real urgency here. Paper trails decay. Banks merge. Providers change names. Older relatives who remember half a story about an old savings book or former employer may not always be around to ask. The best move is not panic. It is a calm, methodical search. Gather the documents. Contact bereavement teams. Trace pensions. Ask directly about small estate release procedures. Check for dormant assets and refunds. For some households, that search turns up nothing. For others, it uncovers money that had effectively been left on the table for years. If you want more plain English breakdowns of the rules that affect older households and family money, stay with this channel. The next check is often not about finding a miracle. It is about asking one more careful question before you assume the trail is finished.